EquityEdge is the data service provided by Queensfield in order to better understand the dynamics of equities. Investing in equities means taking risks. Over the past 20 years, we have experienced significant drawdowns during the tech bubble, the credit crisis, and the COVID-19 pandemic. Fixed income has been a steady source of performance for almost 40 years. It now seems to have limited juice left. From now onwards, it will take risk to get a positive return. Relax. EquityEdge should give money managers a timely view on these equity risks thanks to artificial intelligence. With this tool, generating performance in a risk-controlled manner becomes a real opportunity. What are the drivers of equity performance and risks? Expected future cash flows assessed by experts. The ESG component as a sustainable business is increasingly receiving a better valuation. The discount factor, which is the great unknown. Let us focus on the discount factor. The discount factor reflects the risk appetite in the market towards a geography, a sector, or a single stock. More precisely, the risk appetite measures the variation of the discount factor. EquityEdge has been developed by a team of experienced professionals blending academic knowledge and practitioner know-how. It took more than 5 years of research and analysis, 2 patents, and several reviews by large firms such as Standard & Poor's. We wish to translate the discount factor into actionable signals. In order to do so, we offer 5 approaches from high to very low frequency shifts. The risk appetite monitor for single stocks, which allows people to screen each stock, selecting the top ones rated 3 stars. RAM sectors and styles, which helps us monitor risk in a forward-looking manner by sector. George, which is a dynamic asset allocation tool targeting a very low historical maximum drawdown. CorpSkill, which tiers sectors on the basis of their mid-long-term expected performance. And the red button, a high-level alert signaling market conditions requiring a swift answer. RAM Single Stock offers a near-term forward-looking risk perspective on each stock, with a simple aggregate rating from 0 star, signaling a low or uncertain perspective, to 3 stars, corresponding to a high degree of comfort and confidence. Zooming in on AXA, a 3-star stock. The green line displays the history of the RAM signal. The gray line references the rescaled stock price over the last 12 months. Finally, the reliability score and the Sharpe ratios over the long term and the short term are displayed. Applying the RAM strategy to AXA from 2006 onwards, avoiding risk-off periods. The blue line represents the corresponding NAV, while the black one exhibits the price of the stock. This shows that RAM can help mitigating drawdowns, but also capturing rebounds. RAM sectors and styles gives a summary of the risk appetite signal for each sector and style. By clicking on Energy US, for example, we have an equivalent screen to the single stock one. Looking at George more specifically, we consider 2 investment profiles in this allocation tool. The smooth ride approach targets a steady investment journey, while the opportunistic one looks to take advantage of market rebounds to generate an attractive performance. In addition to RAM sector's next-day view, CorpSkill provides 3- and 6-month views to capture sector rotations dynamically by building 3-tiered clusters. Looking at the first sector tercel of CorpSkill, which selects dynamically the top 3 sectors, we can see that CorpSkill Tier 1 outperforms the S&P 500 and the MSCI US momentum quite clearly. The red button. When there are less than 15% 3-star stocks per geography, we get a signal and understand it is time to do something, such as deleveraging. Critical periods correspond to a high probability flag. This information is useful for people willing to act with parsimony, but do so when required. Let us now look at RAM per sector during the first semester of 2020, corresponding to the COVID-19 outbreak. Let's zoom on financials in Europe. We had a 47.6% outperformance on the first semester of 2020 over the underlying European financial index. If we look at industrials in the U.S., we observed a 29.6% outperformance. EquityEdge is a software-as-a-service solution provided by Queensfield. To get a trial, contact us using contact@queensfield.net.